Hey y'all, it's Whitney Nicely, and I'm going to be covering a lot of different questions in real estate. But first, we're going to talk about this video, and get all your questions answered.
All right. The last question that we have is, how do we analyze properties? Woo, baby, we could go on this one all day long, couldn't we?
We could, but we would eventually get to, what do we call it?
Analysis paralysis.
Analysis paralysis. And if I would say that that's something that, we talked about getting out of your comfort zone, and we talked about overcoming some of your fears. Once you've done all that stuff and you're on the right track, I would say the single biggest roadblock that people get to is they start suffering from analysis paralysis. And what does that mean? It basically means that you are overanalyzing every single step, and to the point where you're going to talk yourself out of it. Everybody's thinking that first deal has to be the perfect deal. And if that's the case, you may or may not ever talk yourself into it. Now, I'm not saying you should go and not analyze something and it be a bad investment, because, hey, those have been out there. Whitney and I have been involved in some stuff that, ended up costing us money. And that's just, that's the risk reward of investing in real estate, just as it is putting your money in the stock market. But, don't sit there and just stress over, looking at the property and trying to second guess what the ARV is, and, going through the monthly income and things like that. Because if you do, you'll never buy a property. You'll always continue to overanalyze. And that's just not something that you want to do.
There's so many steps to buying a house, and it's basically two big steps. You buy a house and you sell it, right? That's the biggest thing that we get to. But there's lots of little steps and lots of little things that we do in the meantime, and it's easy to get analysis paralysis on every single step. I mean, you could spend 2 weeks getting repair estimates on a house, and the seller would sell it in those 2 weeks. While you were busy doing your research, they got it done. All right, so I would encourage you to do some homework up front, get some guesstimates, get some figures in place, make some offers, sign some contracts, get some deals done, and then go back and renegotiate if you need to.
Yeah, the other thing too is, it's not as simple as just doing the analysis. You really have to already know, what my strategy is. And your strategy usually boils down to, and I'm going to cover this a little bit on the webinar that I'm doing tomorrow night with multifamily and stuff. It's usually either a buy and hold situation, meaning I'm going to buy it, unless it's just a pretty house, which, normally a lot of times those go to retail buyers and stuff like that. Yeah, but it may be something that I have to buy it. I may have to put some money in, and then I'm going to hold it and I'm going to rent it out, and I may keep it forever. I may pass it on to the next generation, or I may have plans to sell it sometime in the future, 8 to 10 years from now, right? That's one strategy. But the others, I boil everything into what I call value play. That would cover fix and flips, wholesale, whatever you want to do. You're looking to do it quickly, and you're in a lot of cases looking to get a one-time payment or a one-time benefit from that, right? And I think the biggest thing that people that I would encourage you in, and I don't want to confuse you, but you do need to learn tax strategies and what are the tax consequences on that. A lot of people that I talk to, especially the people that come to us for like one-on-one coaching, they get so excited and they're doing this and they go on, and I say, okay, that's great. And they're like, I'm going to make $50,000. And I was like, you are? And they were like, yeah. And I was like, well, how do you feel about giving 30% of that to Uncle Sam? And they're like, do what? I'm like, yeah, if you actually take title to this property and you make 50 grand on it, and you go ahead and sell it, then you've held it less than a year, you're going to pay short-term capital gains on that. And so people are like.
And that's when the lease option strategy comes in, where you can hold it for more than a year and have a good qualified tenant buyer in it who's going to do improvements and not destroy it.
So again, I don't want to deter anybody or get too in depth, but the question is a good question. But when we're answering this question about how do I analyze it, we really need to focus on what type of deal are we going to put in place, because I can't really answer that question until I know that. I would approach an analysis on a fix and flip separately than I would a wholesale deal, and a wholesale deal much different than I would a traditional owner financing deal, and an owner financing deal different than I would analyze something that I'm going to do a wrap or a lease option on.
Or private money or any of that other stuff.
Yeah.
How do you analyze a deal? I don't know. How are you going to do your hair in the morning? I need to know more.
If I had one thing that I would focus on, for me, it's about my return on my investment. So how much am I going to get back on what I put into the deal? A lot of people will tell you, well, you need to look at the overall ROI of the deal and things like that. Not if I'm not using my own money, I don't.
Another thing you need to look at is we need to look at your situation. Where are you? What are you needing to do? There may be some things in your life, or there may be some things in your seller's life or in your buyer's life that we need to look at, and we need to know what kind of moving parts. It's kind of like playing Connect 4. We need to know what to do to get to the end to win, but there's lots of different things that could come up in the meantime. So just to say, how do we analyze a property? I would start, if you want to analyze a property, I would start with really getting good at figuring out comps.
And ARV.
And ARV. And having some repair cost estimates like in your pocket that you can move some things around on the calculator. If that's what you want to do, or you can go out, you can start looking at a lot of houses, and you can start analyzing houses to say, what repairs, what is this, what is that, what is it? I mean, it's a whole day's topic on how to analyze a deal, how to analyze a property. So if you have a question that maybe is the subtopic of how to analyze a deal, let's talk about that instead of how to just analyze a deal.
Thanks so much for watching. I had a great time on Ask What Wednesday. There's other questions that'll go along with this week's topic, so be sure to find those and subscribe.